Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So good day. We have Mat Piro today. Piro is sort of like pyromaniac, and I think that's very appropriate for the loan world today in that it's maybe not quite as on fire as it was pre-pandemic, but just in the last day or so, since we're recording here on September 18th, the rates went down. So Matt, maybe you can talk first about rates, and then I'd love to hear a little bit about your 84 units that you funded in Los Gatos.
Sure, absolutely. So as expected, the Fed cut the Fed rate a half a percent. So there was speculation all over the map on how much they would cut, when they would cut. It's been anticipated for quite some time. So we finally have it. That will start trickling through the different various lenders with their different programs. Obviously, it's going to hit the residential, owner-occupied consumer loans, which we don't do any of those here at SVS Finance, but that will hit the most dramatic and initially as those rates fluctuate daily. Then the next probably segment of lenders to adjust would be what we do here are investment residential term loans. They're the buzzword of the day is DSCR loans, where it's basically qualifying based on the income of the property. And that's basically it. So those do fluctuate a little bit more with the market. So those will be the next ones. We did have one of our lenders announce a 3/8 rate reduction yesterday based on the fact that they cut. So yeah, and then our, everything else, boys, commercial, the multifamily agency rates will probably see some form of a reduction. Before the cut, we had mid fives for multifamily small balance through our agency lenders. And so, those will probably have some effect and get a little reduction go forward. And then, some will, some won't. And how much is, we'll see over the next several days on the regular kind of commercial loans. For kind of the specialty loans, a lot of the things that we do here at SVS Finance, construction loans, land loans, private money loans, just not gonna do anything really. Those are higher risk and more complicated and specialty loan products that just don't really feel the move like the other folks.
So when will the potential next rate adjustment happen?
Boy, your guess is as good as mine there, Bruce. Again, election year, we could see another drop, trying to spur the economy a little bit and get some money moving back into the system that's been sitting on the sidelines. Good question. I haven't heard the pundits on what they are speculating after just yesterday's rate cut. I usually do watch them pretty regularly. I think everybody was anticipating about a half, quarter to a half. Some people speculated 3/4. We certainly could see another cut before, depending on what more numbers come in for inflation and unemployment. We could see another cut here, before the election.
Wow. Okay. So that would be interesting. So this podcast will come out about 2 weeks after. So it'll be interesting to see how that has adjusted in that time period.
All right.
But
I hope I'm right.
Tell us a little bit about this 84 units that you funded for development in Los Gatos.
It's actually in Palo Alto. That was a Palo Alto developer. We met him when he was 90 years old in 2011. And this was his 8th major commercial development. And he was just having a bear of a time getting approval. And, we were just coming out of, the mortgage meltdown, and people were just getting back to development loans, and the faucet was slowly getting turned back on. I think there was really, quite a lot of just concern about his age and would he be able to finish the project. And, he had experienced a lot of turndowns from the typical institutional lenders that you would think would want to fund a $57 million construction loan for him. And so when we learned more about him and his project and his experience and, his whole snapshot of his financial world, we took him to our private banker, and our private banker immediately said, yeah, we can help this guy. And so it took some doing. What we ended up doing was an $80 million overall financing for him, 2 phases of fundings through 2012 and 2013, ultimately ending up with a $37.5 million construction loan on the subject property, which if you go to the very end of Page Mill Road, it's a mixed-use 84-unit apartment complex right by Microsoft right there.
Wow.
That end.
Beautiful.
Gets to 101. And yeah, so that was our swan song, kind of put us on the map for larger scale ground up construction projects. And, we've been a magnet ever since. And we specialize in working strictly with developers and commercial real estate developers and residential investment investors and or developers on kind of value add renovation or ground up construction. So
how did you get into this business?
Well, got out, oh boy. I've been in the mortgage business most of my career. Started out of high school as an appraiser. My folks were realtors here in Los Gatos. Thought I wanted to sell real estate. Then I realized, wow, you got to work nights and weekends. I don't want to do that. So I started as an appraiser out of high school. Did that for a couple of years. Got my license, moved into just regular retail mortgage brokering, residential consumer loans. They weren't called consumer loans back then. They were just residential, loans, and quickly decided that I wanted to be more on the lending side of things. So I moved into a wholesale lender's rep position with a reputable Bay Area lender and started calling on mortgage brokers. And, that was the start of my lender representation career for, the next, until just before the meltdown, in 2008. So had, 18-year run, doing, a host of residential, commercial, private money, kind of what B&C paper was the thing back then. So, bounced around to a few B&C lenders and then did some commercial lending, direct lending for a direct lender out of Sunnyvale and a thrift and loan. and so that was kind of where I started with commercial stuff, and then got out of the business in the early 2000s, went through the meltdown until things started coming back. Started this shop, SVS Finance, with a broker from downtown San Jose, and kind of that's when we met our developer in Palo Alto in 2011, and been doing commercial and investment property financing here in Los Gatos ever since. So
that's fantastic. So tell me, just out of curiosity, you get a regular real estate brokerage or broker or agent license, right? But is there a special test for mortgage brokerage?
So not in the business use world. So in California, you can fall back on your DRE license to do business use loans. And it's only that you need an MLO license for doing consumer loans. Ever since the meltdown, the Consumer Franchise Board made a very clear delineation that consumer loans needed more oversight and more disclosure, and they came up with all the rules and all the licensing for regular mortgage brokers who want to continue to do owner occupied residential loans, 1-4s, condos and townhomes, those need an MLO license. As soon as it hits a business use, and can do you're doing a loan for an investment property, you can, same 1-4s, condos, townhomes, investment residential property that's being rented or leased. Then you can just fall back on your BRE license.
So how has government regulations been? Obviously, in 2007, everything sort of changed.
Sure did.
So did that make it better, worse, or?
Varying opinions on that. I think if you poll most people who were around back then, they say it's worse. It's worse for the consumer as far as choice goes. There makes it tougher. You have this very clear delineation of lenders who are willing to do consumer loans, and that's it. They don't really delve into the business use loans, and vice versa. You have business use lenders, on these DSCR loans. There are a plethora of those lenders these days, and they don't touch anything consumer use. So I think at the end of the day, it kind of limits access to the consumer, whether they need help with a consumer loan or a business use loan. You just don't have as many players in each, wheelhouse, because there's a dividing line there that makes it difficult for them to operate in both. So and then certainly for private money, when they fall down the credit scale or have difficulty in the qualifying scale with providing proper documentation, it makes it even harder. And this is where almost every private money lender in 2008 exited doing consumer owner-occupied loans completely. So there's very few private money, hard money lenders out there because of all the rules regarding how those loans are kind of seen and what they can charge. And it just is, it's too much for the smaller private money lending shops to deal with.
So pre-2007, 2008, kind of everybody was everywhere, it sounds like.
Yes.
And
private money
now
was doing, yes.
Now you've got sort of these two tranches of sort of commercial and residential. And the residential is kind of much more strict, it sounds like, than it was previously.
100%. And again, it really just comes down to the use of the funds. And they will even go so far as if we're paying off a loan on a house with private money, they want to know what the loan proceeds from the loan they're paying off were used for. If there was any cash out, if there was an opportunity for that loan to have paid for anything consumer oriented, paying off credit card debt or a wedding or trips or whatever. I think some of those rules and some of those practices have gotten a little lax over the years, now that we're a little bit of a ways away from 2008 rules. But knee-jerk reaction for sure was, no, can't take a chance on any of this being consumer oriented, and certainly those folks who have a rented house or a short-term rental, but they use that house a certain number of times a year. It makes it very kind of a little gray area where that loan and those proceeds, get classified for. So yeah, we don't do a lot of investment residential here, except for in the multifamily world. We certainly can do the fix and flips, full business use, because it's a spec flip to sell for profit. The DSCR long-term rental loans, those are all clear business use loans. When you start having to try and choose what you want to specialize in, and as a small mortgage broker, that's what we kind of need to do is what's our specialty is. So we've definitely leaning more towards the commercial and strictly investment residential. So
that's interesting. So your specialty really is making bridge loans.
So, our website's californiabridgeloans.com, and I thought that was kind of nifty. I couldn't believe it was available, that web domain, when we picked it, because everybody's like, SVS Finance Inc. Okay, what do you guys do? Your CPAs, or, that there wasn't any, leading to what it is our activities were. And so it was a little benign there. So we were trying to be more specific with the websites, and yeah, we try and service as many clients as we can in that space, but our motto is bridging the gap between bank and private money financing. We have a ton of our lenders are institutional grade lenders, very A paper, full doc, best of the best rates and terms. That's who we took our client for doing the 84 unit up in Palo Alto, was to an A paper institutional lender. Got him a very A paper loan. Just kind of depends on how much, brain damage you want to go through for paperwork and qualifying and time, right? Because a typical A paper institutional loan, 30 days, 45 days, needs a whole bunch of reports, needs lots of tax returns, business and personal. We do SBA loans here too for owner user properties, or those that are 51% owner user. They can have rented out the 49% and still qualify for SBA. Pretty onerous, processing timeline there. They're quoting 60 days to get something done. Whereas you go to one of our private money folks, and we can close loans in 7 days, maybe 10, 14 business days. So when speed's, a key factor in whatever it is you're trying to do, we tend to, lean on our private money folks to fund those loans quicker, less brain damage, and certainly at of course, higher rates. But it's, cost of doing business when you want to get at your money, and the property can pay for it. So
what's a sort of average rate now for a private lender?
So we have some of our folks advertising rates around 8.5 for bridge loans.
Wow.
Which, some
pretty good.
Some of our banks are charging 8.5, for construction loans.
Right.
So
right.
I mean, that would be for a lower loan to value. Something kind of a layup we would consider, a deal, maybe 50-60% loan to value.
Right.
And we could probably get loan amounts, up to 5, maybe even 10 million at those rates. And then it goes up from there, and we're writing stuff, in the mid 10s, 11.5. We just closed a second mortgage today, that's 14.99%.
Wow.
So
wow.
yeah, I mean, people still need to get access to their capital that they need for their projects. And, we have a plethora of folks ready and willing and able to lend them. It just it all depends on your situation and what, kind of is your hot button, so to speak, on speed.
Right.
Amount of cash out. We have some lenders, give 100% cash out. Like, oh, your property is free and clear. You need $4 million. Here you go. Sure. Here's $4 million.
Wow.
And then we have others that are like, no, we're going to want to hold on to that money and make sure it goes into whatever project they're, putting it into, like with a construction holdback. So it really varies. And it just really depends on your individual situation for your loan request.
Well, that's cool. So where would people get a hold of you, Matt?
Yeah, sure. They can visit the website and kind of see a little more about us, and our contact information's in there. It's www.californiabridgeloans, plural, californiabridgeloans.com. You can email me, Matt with 1 T, MAT at SVS Finance with an E.com, Matt at SVSfinance.com. Happy to give out my phone number too. It's fine. My cell phone, 408-981-5051. Love to another motto of ours, bring impactful projects to life is kind of what we like to think we do around here. So happy to
Wow.
work with anybody,
I'm going to bring you some impactful projects to bring to life. So I'm looking forward to that.
Bring them on, Bruce. We're ready. We're ready for you. Appreciate you, bringing us on your show today and the invite, and, happy to work with any of your listeners, and come back anytime to talk more about whatever specialty products, we can chat about.
We will be back.
Okay.
Here we go.
Okay.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.